David Morgan joins me, silverinvestor.com. David, what a perfect time to have you on, especially given the market action of the last couple of days. I was kind of looking at gold, for example, from the highs we saw Wednesday to the lows on Friday, about $70. Silver underneath its support, previous support level around $30. What do you make when you hear a statement, or is that related, or is only related to the statement the Federal Reserve came out of their committee meetings that maybe they slow down on this sort of quantitative easing approach?
Well, I think it had a very large effect in a very small time frame, Michael. I mean, I think the market overreacted, and first of all, the vote was about split. They're saying there's a possibility, and the reality is twofold. One, the reality is that governments around the world, not just the Federal Reserve of the United States, have no other choice other than to inflate. So I think it was a trial balloon, really, to test the markets and see what kind of reaction there would be. Secondly, even if they did, you have to look at what interest rates and gold's correlation is. And as long as real interest rates, a true rate of return is negative, which it is right now, because the true inflation rate in the United States is probably 10% if you use John Williams' shadow statistics, but drop that in half, let's hit 5%. And the government's official number for inflation is like in the 2% range or so. So until you get real interest rates above the real true cost, the real inflation rate, and have a real yield, it's favorable to gold. So any way you slice it, if you analyze it logically and keep your emotions out of the equation, you're going to realize that the gold, and silver have a long ways to go to the upside.
So, I mean, the bottom line, though, is that, again, people always have, David, I'm always saying this, you got to first decide, are you a trader, are you an investor, what's your time frame, that kind of thing. So I'm just addressing, if you're sort of a long-term player in the precious metals, it's an investment. It may form that part of your portfolio that protects you against, in my words, government incompetence, financial incompetence. This doesn't have an impact at this point. I mean, I agree with you. I thought it was well overdone. I mean, this was just sort of, as you say, a trial balloon floated up there. Got a lot of attention, of course, but a trial balloon floated up there. And again, I'm not so sure, by the way, the U.S. economy, which, it's certainly come off the bottom, but I don't see any sign that it's going to be robust in any way, that it can take a big change in policy, at least at this point.
I totally agree. I mean, fundamentally, the gold and silver fundamentals have never been better. I mean, all this horsing around, I'll call it, that the bankers are doing are basically psychological tactics to try to keep things under control, but they really don't have any way out. And at this point, they certainly put enough money in the credit system. The reason we see some deflationary winds and credit contraction is, one, credit contraction is taking place, but the banks are solvent and reliquefied again, but the money isn't being turned over. And that's the problem. But there's enough in the system right now, the banks really don't have to start lending, because there's enough money, if you want to call it that, in corporate balance sheets as an example, that aren't rebuilding or expanding or growing or anything that would show a true recovery or true growth. What you have is stagnation, because they don't know where to put the money. Well, eventually they'll figure it out, because the governments globally, again, will continue to debase, and that just makes the fundamentals stronger and stronger for the precious metals. And that fact will dawn on people that are not in the market now, and people that have been in the market for some time will continue to add to their holdings.
The other thing I feel I've got to get to is that, again, we're talking about gold because it's measured in U.S. dollars, or silver because it's measured in U.S. dollars. But we were just talking with Victor Adair a few moments ago, and Victor was making very clear. I mean, you look at the yen, my goodness, they are desperate to devalue the yen. So if you're buying silver in yen terms, or you're buying silver or rather gold in yen terms, I mean, we're not talking the same game at all. I also looked at the euro this week. I think the euro looks very weak to me. So again, we could well be talking precious metals in euro terms. Those kind of things. We have to remember that there is a global perspective too. And even if the U.S. was going to tighten, and we both just said, I don't think that's about to happen. But even if they did, you're still looking at other countries clearly stating that they have no interest in tightening at this point, and no wonder. I mean, their economies are a disaster.
Exactly, and of course, it doesn't work. I mean, the idea that, if you increase the money supply and you prime the pump, as it used to be referred to, you'll get the economy moving again. But that only works for so long. I mean, in the hyperinflation in the Weimar Republic, most people don't know this, but the scream, the cry, the beg all the way up was, there's not enough money. How ridiculous is that? I mean, they were doing what Zimbabwe did. And yet the cry was not enough money. Well, no, it's the quality of money, not the quantity of money. But you're right, Michael. There's no way out. And no matter what goes on from this point forward, you're going to see massive mislocations of capital that have taken place over the last couple of decades. And then the system will right itself. When you have a deflationary or an inflationary collapse, you get a readjustment of the wealth that already exists, and it changes hands. It's a very known process that's taken place, time and again, but people don't know it. They don't look at monetary history. They don't understand it. They think it's too complicated, but it's very simple. If you have something you can't pay for, then the rightful owner of that property is going to keep it.
I'm talking with David Morgan, silver-investor.com. I'll take a break because I don't want to get caught in the middle of this, but when we come back, I'm going to ask David specifically about, what's going on in that sphere. Are we creating a buying opportunity here? But what about the companies themselves? We'll do that with David Morgan right here, right across the Chorus Radio Network. I'm glad you're with us. We're talking to one of our favorite analysts, David Morgan here, silver-investor.com. David, we're talking about sort of that macro view just a couple of moments ago. Let's sort of drill down into the markets themselves at this point. We've seen, even before, we got the big drop on Thursday and Friday into the precious metals, for example. But before that, we certainly hadn't seen any notable strength. It's been a drifting lower market since September, really. And I'm just trying to think, what perspective did you have on that? Did that surprise you? I know you, in spite of the fact that you've been a long-term bull on silver, you've been reluctant to jump into new positions until you saw some strength. And I'm just wondering what you feel now.
Yeah, I'm still of that thinking, Michael. I want to let the market prove it to me. That's basically how I've traded for years, and in order for that to happen, it's like a hurdler in a track team has to go over the hurdle, and once it does, that is accomplished, then you have a lot more confidence and probability that your trade will be successful. I was off. I really thought we would finish the year stronger. About the last 3 weeks or so was evident to me that it was selling off into the end of the year exactly like that took place the previous year.
Yeah.
I probably could have put out an update to everybody, but it's short term, and I wasn't shocked by it. Where we're at right now, as you said, I mean, if you go back, I want to just go back and visit some history here, Michael, because I think it will help everyone on your listening audience put this in perspective. If you look at January of 2008, it took until September of 2010 to breach the $20 level. It was a almost textbook perfect cup and handle formation from a long-term perspective, and the handle being right around the $19 level. Once it broke through that to the upside, we went from 19 to about 48. There was only really one sizable correction during that time frame. Once we hit the $48 level at the end of April 2011, we've been in a consolidation ever since. And my mistake early on when I was doing forecasting like January and February of last year was to not do my homework properly and realize that kind of a move up would take a year and a half to 2 years to consolidate. We're about there. I mean, the end of April this year would be a 2-year consolidation. It's been over a year and a half, but a year and 9 months or so. I think we're ready now within a month or two, maybe it'll take 3 or 4 to break out. And once we're above the $35 level, we're easily at the $40 level. It'll take some work to get to the 45. But I want to emphasize one more point, Michael, and that is I am doing a lecture at the Cambridge House Conference in Vancouver. And the title is It Too Late to Invest in the Precious Metals? And it's an absolute belief of mine, and it can't be proven because the markets know more than any of us, and I know that. But if you go back to the last bull market, it started in 1965 and went to 1980. the last year of that silver market, silver started January 1979 at $6, and it ended a year and a month later at $50 at the high. So the biggest move, and I'm used to saying this, and it actually came from an analyst on Wall Street, 90% of the move comes in the last 10% of the time. So what's going to happen in this market is the market will move up to 40, and there'll be a lot of stale longs at 40 that will sell out. And I'm not talking paper traders, although there'll be some of those, but there'll be some physical people. And then it'll finally get back up to 48, and there'll be people that bought it at that level that say, oh, finally I'm even, I hate silver, I'm never going to buy it again. They'll sell back into the market. And eventually those people, and there aren't many of them, will be satisfied, and the market will clear at that level and it'll go higher. Now, it'll probably test the $50 level 3-4 times. But once it goes over that, you're in a new paradigm. Everyone that's ever owned silver anywhere basically is at a profit. And there's nothing more spectacular for a bull market, especially a commodity-based bull market like silver and gold, than a new high. I think that's going to happen in 2013, Michael.
You think that high will, okay, so there we go. I want people to have heard that. So you're looking for, do you have any numbers on the low, Dave? If we correct here in this kind of process right now, are we looking back at $26, for example? That was the low subsequent to that $48, $49 move in April of 2011. Is that what the number you're kind of looking at here as a correction?
A great question. That's always hard. I mean, you're never supposed to give a price and a date and all that.
Okay.
All the time. No, I'll tell you. I really don't think you'll see that low. That's been tested 4 times and bounced off every time. Mm-hmm. So I think, getting below 30 is pretty tough. And I would say I don't think I'll see 29. I would say 29 or higher will be the low this time for this year. But there will be a lot of work to do. I mean, it's been a year and 9-month consolidation. There'll be people that want out that got in at 35, and they'll have to be taken care of. I mean, we've got a lot of resistance at 35. It's bounced there about 4 times. And so we have to break that level of the upside first, so that resistance then becomes support. Once that's done, then again 40, as I said, and then up to 48. So, but I do think with all that's going on from the beginning of the discussion, fundamentally, the fundamental fact is silver's never looked better, gold's never looked better, and it's going to take more than a Fed meeting announcement to take these metals down for a long time frame.
So again, if somebody doesn't have a position or is looking, that you're looking for an opportunity to increase that position with patience, but to increase that position as we go forward here. Dave, I want to just get the difference between buying the bullion and buying the stocks themselves. First of all, tell us how are this, like for example, a lot of the senior golds have reacted far more severely than the price of the metal itself. We've got gold trading at whatever, say, 1650 to 1670 these days. A little lower earlier, as we said on Thursday on the lows, but that's only off a 1900 high. But boy, some of the stocks, even the senior stocks, have been hit much harder. What's the scenario in the silver market?
Very similar. The overall mining equities are basically at a 30-year low. There hasn't been this kind of discrepancy between the bullion price and the underlying miners. I mean, that's how the stuff is produced for 30 years. So if you really want to catch up to the people that were able to buy, gold at 1,000 or less, or people that bought silver at, say, 15 or 20 or less, the way to do it is actually to buy well-selected mining equities. But the risk is low. It doesn't make sense because they've done so poorly, but the risk is you're looking at an opportunity that only comes along once every 30 years. That's the way to look at it. If I told all your audience, you have an opportunity that only presents itself once a generation is considered 40 years, but once every 30 years, and this is a great opportunity, and it's probably in the biggest bull market that will ever take place in world history. If I told your audience that, you think they'd jump in, but you know what? They won't. Because the psychology of the market is that people have to be very brave at the bottom, and they're not. The psychology of the markets, Michael, never ceased to baffle me. I mean, I was telling people to buy silver with both hands when it was at the lowest inflation-adjusted price ever in the world, and they weren't doing it. Warren Buffett did. I was buying, and a few people did, but I mean, basically, you couldn't get the average investor to wake up to that. If silver was at an inflation-adjusted low, lower than it's ever been, that's low. You're supposed to buy low. but people don't buy lows. They buy highs. That's why when we get above 50, there'll be lots of interest. And you probably will call me back and say, hey, David, you forecast it, and you're right. What's happening now? And I'll tell you. I can tell you ahead of time. Bullion dealers will be telling me they've never sold so much silver in their life. At the highs, not at the lows.
No, absolutely. I'm smiling because that's what is so fascinating about the whole investor psychology and as a reflection of society too. And you're so right. It gets very difficult, even if you sit back, and I've done this myself. I mean, I'm just sharing mistakes I've made. But even if I've had a pretty good feel for the market and I say, oh, something's going to go down, you still get down to that point. Then by nature, the predominance of the news is negative. And I've certainly got a lot of examples where I've just, I think I'll just put off that buy I know it's a good buy, but I'm just going to put it off for a bit here. Or conversely at the top, where even if I've said, hey, I think that's around the top, whether it's a stock or an investment, and they go, I think I can squeeze a little bit more, because the nature of it is that all the news is so positive at a top and all the news is so negative at a bottom. And you're, at least I completely agree. It's that psychology that drives me nuts about myself.
Well, we're all human, and it's natural. I mean, you have to basically take your emotions off the table. I've been in the silver market for so long, things that will definitely upset the average person doesn't really upset me, but it's, it's like anything in life. If you're very good at it or very seasoned at it or done it, many, many times, then you know the nuances and things, again, that would bother the average person or newbie. I have an analyst that works with me. He's brilliant. He does great, but, he wanted to get in this market. I said, watch. They're going to take this thing down. They're going to repeat what they did last year. This thing's going to hit a new low near the end of the year. I mean, it'll be a higher high than it was a year before. In other words, silver will show a year-over-year gain. And he was going long. And I said, not me. And, not to prove I'm right. I'm not always right. My trades are great. But I wanted to watch the market, and sure enough, this is what happened. But you're right. And fundamentally, the reason that you see so much gut-wrenching, if you want to use a tough term, is that people know the fundamentals, but that's all they know. And so they know they're right fundamentally. Well, you can be right fundamentally for a very long time and not make any money. I use both. And not too many do. Your friend David Ben Simon uses both. David and I have had great conversations about this. Yeah. But when you're in a market that's commodity-based, you need to use both if you want to be successful at least on a short-term basis. I'm not good at day trading. I blow people up, but I am good at position trading. And all I'm saying is that you have to be mentally prepared for these things because, again, what's going to happen once we get above the $45 level or something in silver, and there'll be a few that are going to sell because they bought that high and they don't like silver. They held it for almost 2 years and they think it's never going any higher than that. And it will. It will take some time to bust through that. Sorry, go ahead.
I was just going to say, let me hold you at that, Dave. We'll come back. I'm talking with David Morgan, www.silver-investor.com. More with David Morgan. I'll ask about some specific stocks you can put on your radar, plus Aussie Jurek coming up right here on the Chorus Radio Network. Just a reminder, on February 1st and 2nd, we have the World Outlook Conference coming. And as I say, this is a perfect time. I'm looking forward to it. I do every year because it's great to get that caliber of person in a room and hearing different views, etc. Dennis Gartman, Martin Armstrong, talking with Frank Justra this year. Really looking forward to that. Mark Leibovit, Joseph Schachter, who's been right on about what oil has been doing. Again, are we going to get a buying opportunity in these areas? All of that. It's just fascinating stuff. And as I say, the first week of the year hasn't been any disappointment. I hope you're going to have a fantastic 2013, and we're going to try and help you do that financially. But what a first week kicking it off with the market activity. And one of the big areas of activity that we'll be looking at in 2013 is certainly going to be precious metals. In silver, I'm well on record as saying I think silver will outperform gold by the end of this bull market in percentage terms. But, of course, been recommending a core position in those, but been out of any kind of a trading position for now 4 months. And I'm not, and by the way, that means I'm not unhappy with the decline. I look for opportunities to take positions in these declines. And so the action of Thursday and Friday, didn't bother me on that. David Morgan joins me right now. You can find David at www.silver-investor.com. David, before the break, we were sort of setting up 2013, and you're looking for significantly higher prices by the time the story is told on this year. But let's talk a little bit about the stock side of things again, and if you look at the gold market as an example, there's sort of a consensus what the big players are in the gold market. I mean, everyone would give you American Barrick, everyone would give you Newmont, they'd give you Gold Corp, Agnico Eagle, those kinds of things. There's pretty much a consensus broad-based of at least large cap. What about in the silver space?
Well, we do resource stocks. We don't just do silver stocks, Michael, and silver and gold mostly will make up the portfolio, but on the silver side, we recommended 1, 2, 3, 4, 5 in the speculative category. By the way, I don't mind speculating, but these are really tough. Of those 5, 3 are up and 2 are down over 2012. I don't know anyone in the industry that's recommended 5 new ones in last year that has that track record. As far as the top tier, I'm going to just go back to that. You're right what you said. What I do every month is I determine out of I guess there's never more than 10. Looks like there's about 8 on there now. Is which ones of those 8 that are buy and hold long term are doing the best on a monthly basis? And sometimes the same one, as example, Franco-Nevada hits it again and again and again and again. Look at a chart. And so, because it's, by our parameters, doing better than the other 8, it is in the top 3. Now, we just switched one out. Agnico Eagle is doing better than Yamana. So Yamana dropped down as a hold, but it is not doing as well as Agnico Eagle. Silver, Wheaton, Agnico, and Franco are the 3 best. This is big, huge billion-dollar companies, and this is a type of company that a fund manager can, move large amounts of capital in. There's liquidity in these stocks. I had a guy that hugged me in one of the London conferences because basically he understood what I was doing, and if one dropped like Yamana, he'd sell it and move his money into Agnico Eagle, and it just kept going. I won't say it kept going up and up and up. I'm not saying that. What I am saying is I kept putting money into the stronger and dropping a weaker. So that's how that part of the portfolio works. As far as mid-tier goes, I don't like to give picks because it's how I make my living, but I'll do it. I'll give you one, Michael. Okay, the only stock that we picked in 2012, because, I'd rather be right. I'd rather make money. You don't have to buy everything down the street. We picked Allied Nevada Gold. We did it in the middle of the year of last year, and that stock is only off 3%. I love that company. It's a buy as far as I'm concerned. So there's one for your listeners. Check it out. It's got credits on most of the metals, but it's primarily a precious metals company. There's several more, and we're going to be talking about this during the workshop of the next conference I'm at on how we select our companies. We don't mess around. We don't fool around. I don't think there's any. In fact, I do not know of anyone in the industry that has picked more speculations that became mines than the Morgan Report. And it's not just me. I mean, I have a staff. I have people that work for me. I have people that I pay. I mean, we go out and, trudge around these things. And a lot of the guys do. I'm not saying we're the only ones that do that. What I am saying is that we're serious about what we do. We're not, and I think the main problem I have is that I'm not charging $25,000 a year for the report and selling to institutions. But, that's my problem.
Well, no, but you know what? By the way, Dave, just as an aside here, this is why I think people are crazy if they're interested in a sphere. And in this case, as you say, you're talking about the resource sphere with an emphasis on gold and on silver as an example with Silver Investor. This is why people are sort of nuts. They say, well, I don't want to pay $300 for something or $400. I can't think there's not a better bargain I know when you can hire someone like a David Morgan and his staff to go out and do all the work. I mean, hundreds and hundreds and hundreds and hundreds of hours, spent looking at a single situation. You know what? That's pretty good use of my money to go and get someone with an expertise to spend all that time, that amounts to, I'm paying about a cent. I'm paying about a cent an hour at that point. And as I say, because if you're serious about these areas, and we have Ryan Irvine on, for example, who does small caps, not so much in the resource sector, but it might be a small technology, a small anything. He doesn't, there's another, let's hire someone to go do that work for us. And as you say, that's why I think Silver Investor does a terrific job, because the staff, and yourself, of course, but go out to the individual mines. I'm not going to do that, let alone the expertise for most of us to sit there and say, okay, here are the parameters of my decision making, that are spelled out. And, whether it's a company like Allied Nevada Gold, or whether it's a senior, or whether it's, as you say, you're looking at something that may develop into a mine, you have your set of criteria and go and do the work to source it. I just think that's exactly why I think people should think of it in terms of hire someone like yourself with this, 30 years expertise in one particular area of doing it. And there are a few good people out there, and I say, man, it's usually just the best bargain in town to get people to do that. And that brings me back to the sort of more aggressive sector here. It's been a tough environment, for the juniors, and at each time you want to know if they're throwing the baby out with the bathwater. So, what are you looking for in one of those situations?
Wow. Well, we like producers or near producers. We like them with a strong balance sheet. We like to do a quick ratio. I mean, one of the guys that works for me is a finance background like me. He's kind of cutting his teeth on individual mine visits. He knows what to look for, but, I've been to many, and then the older guy that works with me is more boots on the ground and, looking at the infrastructure and all this, and not as financially oriented. But the team works together really well, and of course I always have the final say. But we really want to see, especially today with the credit markets being the way they are, the days of buying any ranked junior for exploration, those days are over. I'm not saying there won't be a couple of discoveries made over the next 5 years or so, but that is not the sector to be in. Unless you have inside information or you really know the company, you don't really want to be in that sector anymore. There's just not enough free money floating around. That went between the beginning of the market in 2000 to 2005 or 6. So we look at strong balance sheets, look at good management, look at the projects, look at what the margins are. How much is it costing them? Looking at, if it's open pit, if it's high grade or not. The old adage that grade is king still holds. I did a special on Archie's Rule, and this is a very important way of looking at whether a mine is worth buying or not. And these are, this is hardcore, serious business. Making money in the markets, I take it very seriously. And it's not a game, and you can't just use a dartboard. And, of course, there's all these arguments that there is, that's just nonsense. I mean, the reason that there are very good, well-off investors is because they know what they're doing. But the amount of people that do are not that many, as you said, and thank you for the acknowledgement, and I don't want to be a whiner, but, there's a lot that goes into these reports. There's a lot. I mean, if I paid these guys by the hour, I couldn't afford them because these guys are passionate about this stuff like I am. They do not make a lot of money on an hourly basis, but they're really dedicated because we love the sector and we are passionate about it. I don't know what else I can say.
Well, we've had a huge kickoff in terms of action for the year. 2013 is going to be fascinating, Dave. I look forward to our next visit. You'll be in Vancouver coming up in mid-January with Cambridge, but we'll visit again in the near future. Thanks for finding time for us.
Well, my pleasure, Michael. It's always great to be with you. Thank you.